guys, it's Dave here. I hope you've had a great weekend. Thanks for tuning in as always. And over the past few days, I've been thinking a fair bit about potentially adding some more dividend payers to my stock portfolio. Now, I know that's not necessarily as exciting as like some, high growth stock you think you might be able to get rich quick with, some crazy options play. The videos where I tell you that, oh, this stock could potentially 5x over the next couple years or 10x or something crazy like that are inevitably going to be more exciting than talking about getting paid a dividend of under 5%. But I do have to say there's something extremely satisfying and uniquely satisfying about receiving that dividend payment into your bank account. When you check it, you see it's arrived, it's cash, it's in there, you've got it, and you're not giving it back. It's just extremely satisfying, especially when you're getting it month after month after month, to see that income trickling in to your account. Now, of course, investing in a growth stock, you may see it move a lot quicker, a lot faster, but it may very well drop the next day. And if you haven't sold, those returns are gone. They're not captured. Whereas if you get that dividend payment into your account, that's yours forever to do with as you want. You still own just as much of the company, and you just have that comfort and satisfaction of getting that recurring revenue stream into your account. So lately I haven't been holding any dividend stocks. I've been focusing more on those potential high growth names, but I was thinking I might look at adding some dividend payers to balance out my portfolio and get some of that regular payment coming in. Let me know down below if you like to hold dividend stocks, or do you focus more on non-dividend payers. Obviously, the counter argument to the dividends is that these companies paying out the dividends are obviously not reinvesting that money in the future, and the money could be better spent investing in future growth to drive the business itself and the underlying stock to grow much faster. So dividends are generally synonymous with larger, more mature companies that don't grow as fast. And for that reason, in this new age of space companies we're seeing emerge, there's not a ton of dividend paying options, but there are some I thought I'd take a look at and share with you. Before I get to that though, if you're new here, I hope you'll decide to subscribe by the end of the video. I come back with space videos, investing videos very regularly, and if you're not new here, every like really helps out with the algorithm and gives me a warm fuzzy feeling, so thanks so much for that. Without further ado, here are my 4 top dividend payers in the space industry. By the way, one quick note before I dive into our first company. A lot of these companies are not pure space plays, and they have other areas of their business, so keep that in mind if you're looking to invest in a pure space company. Some of these may not be for you. And secondly is a lot of them may have exposure to defense sectors of the market, meaning if you have any sort of personal reasons where you don't want to invest in anyone that works with weapons or the military or defense, then these might not be for you either. However, on the other side of things, a lot of people think it's a great time to invest in companies with defense exposure because there's a lot of geopolitical unrest right now. Defense spending is spiking as we're seeing the Ukraine situation continue to unfold. Companies with exposure to defense may very well benefit in the future. So with that out of the way, our first company we're looking at today is none other than Lockheed Martin. You may be familiar with it. This is quite a famous company, quite an old school company. They've been around for an extremely long time. They have exposure to space as well as several other areas of interest. But in terms of their space side of things, they're probably best known for their Orion capsule, which they've been working on for years and is going to take humans back to the moon, although not actually land on the moon. It will carry those humans to the moon, though. They've been working on that for NASA for years. And whereas a company like Boeing, which is an old school space company, has had a lot of problems of late, their SLS rocket, which will carry Orion, has encountered tons and tons of cost overruns and delays, and really just has a bad reputation at this point, and I personally wouldn't touch. Lockheed Martin has not had nearly as many of those problems. They've actually executed pretty well on the Orion capsule. There haven't been too many problems with it. It has been tested twice already successfully, and it's looking like it's ready to go in advance of the SLS from what I've heard. So good things for Lockheed, and they do seem to be executing well overall in the space sector. They're also creating early warning weather and climate observation satellites known as the GOES-R series, as well as a lot of other projects that they have their hands in. But do note they don't actually do launch themselves, so they work with other providers for their launch. And speaking of launch, they actually are partial owners of Rocket Lab. They did make an early investment in the company, so if you're owning Lockheed Martin, you actually have some exposure to Rocket Lab's stock as well, small as it may be. In addition, Lockheed Martin is also a partial owner of the United Launch Alliance, an extremely old school rocket launch company. Although it's kind of a separate entity, it is partly owned by Lockheed Martin, so owning the company would give you exposure to this extremely old school launch provider, and Tory Bruno running the show as they're working on their new Vulcan rocket. Some of the bonuses for this company are it has an extremely respectable 2.65% dividend rate. As well, it's already profitable. It has a price to earnings ratio of around 20. You don't have to worry about it going out of business or trying to reach profitability like you do with a lot of these new age space companies that are still trying to get profitable and grow. This one, they have a solid balance sheet. They're not going to go out of business. They have got a lot of government contracts. They play in other areas as well, like defense, and really just a completely solid name that I wouldn't have any trouble owning in my portfolio. Definitely would prefer them to the likes of Boeing by far. So that's our number one company, is Lockheed Martin. Now, for number two, we have another old school name in the space industry that's been around a long time, and that is Northrop Grumman. And once again, they are exposed to other areas of the market, but they do have a long and storied history in space, and they also do launch themselves. So they have an Antares rocket, which has been supplying the International Space Station for quite a while, but that did encounter some hiccups when the issue with Ukraine and Russia and new rules surrounding launch meant that they were no longer allowed to manufacture engines over in Ukraine and Russia. That put a big damper on their Antares operations. They're now working to bring manufacturing over to the United States and have established a partnership with Firefly Aerospace, one of the newer private space companies, to work on a next-gen Antares rocket. In addition to Antares, they've also done a lot of work for the James Webb Space Telescope for NASA. They were the prime contractor on that job. They designed and built the deployable sun shield, provided the spacecraft, and integrated the total system. In addition, the observatory subsystems were developed by a Northrop Grumman-led team as well. So thank you so much, Northrop. I'm a huge fan of the James Webb Space Telescope and definitely appreciate all the work you guys did on that amazing spacecraft. They also have a concept for a commercial space station. I don't know if this is ever going to actually get developed, but they definitely would love to see a future space economy with several exciting commercial space station options in low Earth orbit, so keep my eye on that one, as well as a variety of other space projects. Now, in terms of the dividend, it's a little bit lower than Lockheed Martin, only paying out at a 1.58% rate, meaning you don't get as much of a return in your dividends, but hopefully they would be investing the difference back into the company and trying to grow faster. Once again, you're not going to have to worry about them going out of business anytime soon, as they are a profitable company and they do have a pretty decent balance sheet on the books. In addition, Northrop has a bit of a lower price to earnings ratio of about $14, not too shabby. Their dividend payout ratio is also about 22%, so looking extremely sustainable and not at any risk of having to be cut in the future. And indeed, Northrop Grumman has had a history of raising their dividend payouts over the years. As for Lockheed Martin, their payout ratio is sitting at a little more uncomfortably high at 48.45%. Number 3 is Raytheon Technologies. Raytheon provides a wide range of space-related services, not limited to advanced weather interactive processing, constellation management, missile warning and defense, Earth observation, as well as a couple subsidiaries including Blue Canyon Technologies and Seeker Engineering. They also operate a next generation GPS system to improve the accuracy and availability of GPS navigation signals, as well as protection against cyber threats. Raytheon has quite a respectable dividend yield, sitting at around 2.5%. Their price to earnings ratio is a little bit higher right now at 25.67, and their dividend payout ratio is looking to be a bit higher at around 58%, meaning they're paying out about 58% of their profits in dividends to shareholders. Last but not least, we have General Dynamics Corporation. They're also paying out a dividend at a rate of about 2.5%. Seems like that's the sweet spot for a lot of these old school space companies. General Dynamics Space specializes in developing and manufacturing advanced space systems and technology for government and commercial customers. Some of their more high-profile projects have included developing a new GPS system for the United States Air Force, building out 10 GPS-3 satellites that provide advanced accuracy and performance. They've also designed and built the tracking and data relay satellite system for NASA. This network of satellites provides continuous communication with spacecraft in low Earth orbit, allowing for real-time data transmission and tracking. Another high-profile project they did is the Mobile User Objective System for the U.S. Navy, providing secure mobile satellite communications for troops on the ground, at sea, and in the air. Their space-based infrared system for the U.S. Air Force provides advanced early warning of missile launches, helping to protect the United States and its allies. And the General Dynamics Space also played a key role in the development of the James Webb Space Telescope, collaborating with NASA, Northrop Grumman, European Space Agency, and the Canadian Space Agency. The payout ratio on General Dynamics dividend is around 42%, so looking pretty sustainable there. So those are my top 4 dividend-paying companies in the space industry. Let me know which one you think would be number 1, or if you have any other suggestions for dividend payers in the space industry. But while you're at it, when you're designing your stock portfolio, you might not want to constrain yourself to only dividend payers, so let me know if you have any other suggestions there in the comments below. Personally, I'm looking at a Canadian bank ETF right now called RBNK. They're paying out at a rate of almost 5%. Canadian banks are generally very safe. They shouldn't be in trouble with this current United States banking situation, and the payout rate historically is more like 3%, so to get them paying out at around 5%, I think is a pretty great deal. I hope you enjoyed this video. Thank you so much for watching. If you've made it to the end, I hope you'll consider subscribing and hitting that like button for me. I hope you have a great week, and I will see you in the next video. Bye for now.